To celebrate my 50th birthday, here are my 50 laws of money, learned after making loads of mistakes myself and refined by nearly 3 decades of helping other people build wealth and retire well. My name is Pete Matthew, I'm a chartered financial planner, and these are my laws of money. You might disagree with some of them, but hey, it's my birthday and it's my video. So here is everything you need to know about how money works and how you need to work with it, sorted into a few loose categories. I'm going to cover control over money first, then some thoughts on the foundations for managing money well. Next, I'll talk about building wealth on those foundations, then about putting money to good use, and finally, some thoughts on behavior, how to make sure you don't get in your own way. Now, if you want to have these laws connected together, I've put them all into a pretty downloadable PDF, link in the description. Here we go. Money can easily control us if we let it, but we should be the ones in the driving seat. So here are my laws for financial control. Money makes an excellent servant, but a terrible master. No one is more committed to your own future than you are. No one else is going to work as hard or make as many sacrifices as you are for your own future. You are your own number one priority. Money is just a tool. It's a means to an end and never an end in itself. If we chase it for its own sake, we will never be happy because we'll never have enough. Financial control means looking forward, not backward. Tell your money where it's going to go each week or each month. Have a plan for your spending and your saving in advance. Good things rarely happen by accident. Be intentional with your money and it'll serve you well. Stay focused. Keep your head down, earning and saving, but regularly lift up your head and look at where you're going. That will keep you focused on the task at hand and it'll give you purpose. Life happens. Change is a constant. So review your entire financial situation at least annually and whenever anything significant changes to your situation. Reducing friction makes life easier. Automate what you can, but review regularly. Leave things fully on autopilot and you'll crash into a mountain, so make sure you keep an eye on things. Have a plan, but hold it lightly. Boxer Mike Tyson said that everyone's got a plan until they get punched in the mouth. Plan your finances, but be prepared to be flexible. Next, we've got some foundational basics. These are the things that underpin everything else when it comes to financial success. There's loads more practical help with this stuff for free over at Meaningful Academy Financial Foundations. I'll put a link in the description. Here we go. Spend less than you earn. There are two sides to that. You can spend less or you can earn more. It's not about how much you have, it's how much you keep. Cash flow is king. Bad debt is a financial anchor. You need to cut it loose. Debt that funds lifestyle rather than assets keeps you stuck. So pay it off aggressively and then stay out of bad debt. Your biggest asset is your ability to earn an income. Without it, you will never build wealth except by chance. You must protect your income in case you lose that ability to earn due to sickness or accident. Insure the money machine. Income protection insurance should be your first priority after paying off any bad debt. If anybody else is dependent on your income, then you should consider life insurance to be mandatory. Avoid insurance that also tries to be an investment. Keep the two separate always. Some insurances include an element of investment, aiming to keep the premiums down, but this just never ends well. Build a buffer. Have an emergency fund of between 3 and 6 months of basic outgoings. Keep it in a bank account you can get at easily. The peace of mind that this brings is of incalculable value. It's FU money. It allows you to walk away from a toxic job or a toxic relationship. Stand your ground. When you're starting out, you might get abuse for prioritizing your financial health, especially if you decline invitations to social events to save money. Just remember, the people dishing out that abuse, they'll be the ones coming to you for advice in a few years. Don't split your attention. Don't invest with one hand while paying off a credit card debt with another. Do one first, pay off the debt, and then start investing, not before. Okay, with the foundations in place, we need to build on those foundations. And I cover this in loads more detail and provide a ton of practical tools over at Meaningful Academy Build Wealth. Again, there's a link in the description and a discount code if you want to sign up. Right, here are the laws for creating a wealthier future. Cash is not an investment. Money stored in the bank will lose buying power over time. Only money you need to keep in the bank is your emergency fund and any money you're going to spend in the next 3 to 4 years. Everything else can and should be invested. If something sounds too good to be true, it probably is. Stick with what we know. There are only two kinds of assets that have been proven to build wealth consistently over decades: equities or shares and property. Businesses and bricks. I see no reason why that won't continue. Volatility in stock markets is a feature, not a bug. Accepting that volatility is the price of entry if you're going to be an investor. Control what you can control: tax, costs, and allocation. And don't sweat the stuff that you can't, which is pretty much everything else. You only lose or gain money when you sell. Until then, gains or losses are theoretical. When markets are distressed, shares are on sale. Try to take advantage by buying more of them if you can. The best portfolio for you is the one you can stick with. Simple is best. Complexity leads to inertia and a lack of engagement with your finances. Keep it simple. Most people just need 2 investment accounts, a pension and an ISA, maybe including a lifetime ISA. With an annual combined contribution limit of £80,000 per person per year across those 2 accounts, that's enough headroom for probably 98% of the population. There's just no need to get more fancy than that unless you are very wealthy or a very high earner. Handle leverage with extreme care. Borrowing to invest, that's what we call leverage. It amplifies both returns and losses and is the quickest way to go broke. It's never been easy to make money than it is now. It's hard work, but there's more opportunity than at any point in history up to now. Okay, there's no point in building wealth for its own sake. Money is there to be used, and for many of us, that really happens in earnest in retirement, but I actually think we should be putting our money to good use throughout life. So check out my course at Meaningful Academy Retirement Planning for my best learning on how to plan and execute the perfect retirement. Again, link and discount code in the description. But now here are my laws for using money wisely. There are only 3 uses of money: spending it now, investing so you can spend it later, and giving it away. Of these, the most joyous is giving to people you love and causes you care about. Generosity creates abundance. Giving isn't just about charity. It shifts your mindset from scarcity to plenty. The more generous you are, the richer your life becomes. Buy cheap, buy twice. Quality usually is the best value. So whatever you're buying, think in terms of cost per use rather than just the price paid. Spend more earlier, especially in retirement. Too many people leave too much money on the table because they run out of health and energy having not spent enough. Don't let that be you. Don't buy more house or car than you need. Only borrow to buy things that appreciate. Consider leasing expensive things that depreciate, like cars, but tread carefully with that. And for everything else, buy outright. Don't fear the spectre of long-term care. The odds are that you won't need long-term care, and if you do, probably not for long. So don't sacrifice enjoyment of your good years just in case you need care eventually. It is possible to strike a balance that doesn't leave too much money on the table. Better to give with warm hands than cold hands. Experience the joy of giving while you can see the gratitude on the faces of the recipients. And finally, our success with money or otherwise will come down to our behavior around our finances. So here are my laws for behaving well with your money. There is no should. There is no right. There is no best thing that you can do when it comes to your finances. You can only see if the decisions you make were good ones in the rearview mirror. So review things regularly, but don't let obsessing about what's right and best rob you of progress. Money is like alcohol. It amplifies our natural tendencies, which we might prefer to remain hidden. If you habitually overspend, earning more money won't fix that problem. It'll only amplify it. Today trumps tomorrow. Given a choice between enjoying your money today and delaying gratification, always choose today because tomorrow just isn't guaranteed. In reality, you'll have to balance the two. Ignore everything you hear or read about markets and investments. The media is interested in short-term news, but you should be interested in multi-decade returns. Don't take financial advice from someone who's poorer than you unless you're paying them for the advice. Beware the tyranny of small decisions. Getting buried in minutiae can prevent you from seeing the big picture. Deciding between putting 5% or 6% allocation to commodities, that's just a distraction. Just invest and learn as you go. If you're in a couple, you should plan together, even if the mechanics of your finances are kept largely separate. You just can't build a life together while keeping finances hidden from each other. You are not a machine. You are an emotional being. You can't expect to be rational when it comes to something as complex as money. You can DIY your finances. If you have the time, the understanding, and the inclination to learn about finances and putting your learning into action, you need never see a financial advisor. But most people lack at least one of those three, and that's why I have a job. That said, everyone can benefit from professional independent advice, especially as they approach retirement, or if the numbers are big, or if there's an element of complexity like overseas earnings or you're selling a business. Weigh the cost of advice against the value to you of having a professional look things over. If in doubt, zoom out. A zoomed out, long-range perspective is essential for financial planning, whether that's when looking at market returns or your long-term goals. Focusing too much on the short term just leads to bad behavior. Enough is enough. There's always a bit more return to be had, another pound you can earn. Work out how much is enough for you to live the life you want to live. And once you reach that number, take your foot off the gas and enjoy what you've built. Money is the lowest form of wealth. Of far greater importance are health, relationships, and making the most of the time available to us. Use money to serve these higher aims. You know, writing this video was harder than I thought it was going to be, not because I struggled to think of 50 laws, but because I found it difficult to know which ones to leave out and which ones to put in. And I might well revisit these in future, maybe for another book. But tell me, which law resonated with you the most? Are there any that you disagree with? Leave a comment and let me know what you think. But I hope these are helpful. Don't forget the downloadable PDF. There's a link to that in the description. And thank you so much for watching. Do like the video if it was useful, subscribe to the channel if you're not already, and I'll see you in the next one.